Hi everyone, happy Friday Money Wind Up. If you've been watching the Brisbane property market lately, you might be wondering, is the market finally cooling down or are we actually heating up again? Because depending on who you talk to or what headline you read, you'll probably get a completely different answer. So let's unpack what's actually going on. Brisbane has obviously had a few massive years. We've had strong population growth, interstate migration, limited housing supply, rising rents, and a lot of buyer demand. And even with higher interest rates putting pressure on borrowing capacity, Brisbane has remained one of Australia's stronger property markets. But that doesn't mean every property is flying out the door. And this is where I think the conversation really gets interesting. Because rather than asking, is Brisbane hot or cold, a better question might be, which parts of the Brisbane market are hot and which parts are starting to cool? There's a big difference. So good quality properties in desirable locations can still attract plenty of competition. If something is well presented, realistically priced, and in an area where people really want to buy and live, you can still see multiple offers and buyers having to move pretty quickly. But buyers aren't necessarily throwing money at everything anymore. Properties with obvious drawbacks, maybe they need a lot of work, or they're on a busy road, or they're poorly priced, or they simply don't tick enough boxes, they can sit around for longer. And personally, I think that's actually a healthy sign. It means buyers are becoming more selective. Now, one of the big things supporting Brisbane is supply. We can talk about interest rates and borrowing capacity all day long. But ultimately, if there aren't enough properties available for the number of people who want them, that puts pressure on prices. And Brisbane continues to have that underlying demand. We've also got a longer term story around infrastructure investment and the lead up of the Olympic Games. Now, I definitely wouldn't buy a property just because the Olympics are coming. That's not an investment strategy. But the infrastructure spending happening across southeast Queensland is certainly something worth paying attention to over the longer term. So what does all of this mean if you're thinking about buying? I wouldn't necessarily sit on the sidelines waiting for some huge Brisbane property crash. In over 20 years, I've yet to see it really crash in Brisbane. Nobody knows exactly what the market is going to do next, and trying to perfectly time the bottom of the property market is incredibly difficult, even for those who are in that industry. So what you can control is your own financial position. How much can you comfortably borrow? What would your repayments look like? What happens to those repayments if interest rates change? And importantly, how much breathing room are you leaving yourself after you buy? Because getting approved for a certain loan amount doesn't automatically mean you should borrow every dollar of it. And if you're selling, this is also a market where pricing matters. Buyers have access to more information than ever before, and I'm finding they're actually getting prepared earlier. If you price a property too aggressively, hoping someone will just come along and pay it, you could end up sitting on the market while buyers focus on better value alternatives. So, is Brisbane cooling or heating? I'd say it's more nuanced than either of those answers. There's still plenty of underlying demand, and good properties can absolutely perform strongly. But buyers have also become more discerning, and not every property is going to get the same result. And that's why I'd be very careful about making a property decision based purely on the headlines. Your suburb matters. Your type of property matters. Your budget matters. And most importantly, your personal financial position matters. If you're thinking about buying, refinancing, or investing, and you want to understand what the numbers look like for you, reach out. We can run through your borrowing capacity, repayments, and different scenarios so that you can make the decision with the numbers in front of you rather than trying to guess what the next property headline's going to say. Happy Friday Money Wind Up, guys. Have a great weekend.